say the least. Yeah. Okay. All right, guys. Welcome, welcome, welcome. I think we should start because then we will lose time waiting for people who might not be coming, or who might rob us of all the time that we could have to obviously get through all the questions um, that you guys might have. So, as you guys know, this is a revision, right? I'm not lecturing, I'm revising. And what that means is that you guys have actually come to bed. So if there's anyone working today, it's actually you. Okay? So please, let's engage, let's interact. As you guys are writing on this Monday, you know, um, I know and I am sure that you have been studying. And then as such, let's interact. Because if you are wrong on anything, then now's the time we can quickly also then polish that up. So let's engage and interact. Okay. And if you saw the email that I sent you guys, um, the one that I sent it to BCom Law, I sent it to all of you guys, right? Because I thought, no, this is probably going to be of value to a lot of us, and as such, um, let's have all the first years who are doing the module be able to come for the workshop. Hence why we put this specific venue. But that's fine. That's fine. It's no stress. Let's work with those who are here and make the most of this time. So we're going to be going through the questions. This is how we're going to approach it. We're going to be reading the questions, trying to understand the questions, looking at the answers. For the suggested, these are suggested answers. Okay. And then understanding the logic as to how we arrive at those things. Does that make sense? Okay. So this is why in the email I said you guys go through those papers so that if you have questions, which you should then have, right, unless you understood everything, then we can iron out, okay, why is it like this instead of that? Does that make sense? Okay. So if you actually did that, you will actually get the most benefit from this session. But enough said. So I'm not going through question one because question one is just theory. Okay, so you guys can go through your techniques for that. That said, let's jump straight into question two. You guys said let's start with 2021, so let's go there. Okay, right. And then just remind me at the end of the session, I have a gift for those of you who are here. For those of you who are here, just remind me to tell you what that is. Okay, so here it now says, for my paper supply, question two, we always go to the required to see what they want, right? This is exam technique, okay? You go to the required to see what they want, so that as you go through the information, your mind is already looking out for key information. Does that make sense? Okay, so under the required, it says calculate the following. Total costs incurred by blue traders during April 2021. All right, you go to the next one. Total sales revenue earned by blue traders during April 2021. Next one, you've got the gross profit earned by blue traders during April 2021. 2.4, that input claimable by blue traders during April 2021. 2.5, the VAT output payable by blue traders during April 2021. Then 2.6, the VAT payable or refundable for the month of April 2021. You must clearly state whether the VAT is payable or refundable. What are they assessing there? What are they trying to see whether you know or don't know? With that question there. Input, VAT, output. Yes, they're trying to assess your knowledge of input VAT or output VAT because we know that VAT payable is what? What type of VAT would make us, there's a liability, and which one would that be? Which one would we be It would be output VAT, okay? So that's what they're testing. Do you understand that? And also they're testing, do you understand the VAT return? Remember the VAT return is, we are doing this at the end of every VAT period, and we're saying, do the SARS owe us money? If they owe us money, that means our input VAT was more than our output VAT, which means we deserve a refund. If our input VAT is less than our output VAT, that means we owe SARS. And if we owe SARS, it's a VAT payable. Does that make sense? They're testing. Do you know all of that? Okay. Then the last bit, okay, we'll get to that a bit later. 2.7 we'll get to a bit later. Can you just hand out 2021? Just 1, 4, 2. Okay, this is just in case you guys, which I can see you don't have an actual hard copy. Yeah, I'm assuming you're following via electronic, which is fine. But then if you want to just scribble something on there, I thought I'd just print them out for you. Nice. Right. Okay, so let's get into now the information in the question. It says the following, we're in question 2 again. The following relates to Blue Traders for the month of April 2021. Blue Traders only sells 2 products. Okay, namely, I'm just going to call it A and M. Okay, goods purchased. All right, for A, they give you 23,000 including that. Goods purchased for M, they don't give you the amount. Can you see that? Goods sold for M, they're giving you excluding VAT. Okay, that's fine. Goods sold for A, they don't give you the amount. Okay. Additional information, Blue Traders uses the perpetual inventory system. Okay, the perpetual inventory system. So if you look at my paper, can you see how I've scribbled on it? Because I'm saying, okay, it's important for me to know they're using the perpetual inventory system. It's also important to know that all goods are sold for cash only. Does that make sense? Right? Then it's also important for me to know that all goods purchased were sold in April. So when I'm now doing my calculation to say what was my sales revenue, I know that I sold all of the goods I purchased. Does it make sense? Because if you don't know that all the goods you purchased were actually sold, then how do you know how much revenue you generated? So can you see? Okay. So we're circling this key information. Please grab one of these. Okay. We're on question 2. We just started. Okay. Then next bullet point, it says goods are sold at a markup of 25% on selling price for both products immediately. The moment I see markup, I'm building my model. Okay? Those of you who are not my students, this is what I mean when I say my model. C plus P, I'm sure you saw this with your lectures, is equals to what? Selling price. Cost plus profit is equals to selling price. And then what am I saying after this? So the moment I see markup, I know my markup is equal to my profit. So my profit is what? 25%. Okay. Why?
Because it said on.
It said on. We know that whatever follows on or above or at is then 100%. So in this case, they said on selling price. Okay. So then that makes cost what? 75%. Why do I do this immediately? Because I'm going to use it. And I would advise you put this on your answer booklet somewhere where I can see. Okay? So I can see, okay, this person knows this, okay, needs to be done, and is about to apply it. Okay. And if you do it wrongly, at least I can see, oh, okay, they just mix things up, but you're on the right wavelength. Does it make sense? Okay. All parties involved are registered VAT vendors, and all goods purchased or sold are a standard rate of supply. Okay, this lets us know, okay, wherever VAT is applicable, it's going to be applied. Because all goods sold, all goods purchased, is our standard rate. VAT is levied at 15%. Okay. Right. Show all workings as marks will be awarded for this. Guys, please do yourself a favor. Round to the nearest rand. I know my class, they always used to say or ask, so how will we know what to round to? There you go. The information will either be on top of the your first page on the question paper, here in the additional information, or within the question. All right? So if they tell you what to round to within the question, follow that for that specific question. Does that make sense? Even if they said something under the additional information. Okay? Under the additional information on top of the paper, that's regarding the whole paper. But if they say something within a question, follow what they've said within that question. Cool. So again, the first thing that they wanted us to calculate there is the total cost of sales incurred. So cost of sales for A, all right? We then go there. They actually have given it to us. They say including VAT. Here, what are they now testing? Because our cost, right? Is it VAT inclusive or VAT exclusive? When we are talking about our cost. Because here what they want us to calculate the total cost of sales, right? So we know whenever we buy a product that is standard rated, that means there's going to be input VAT, right? That input VAT, is it part of our cost or not part of our cost? It's not a part of our cost. Why is it not a part of our cost? Because we're going to claim it back from SARS. It's the VAT refundable portion, isn't it? So we now come here, okay, like I told you, this is why, the other reason why the answers are there. But now we're explaining the logic. Because the question that you're going to see on Monday is going to be different. They might use different names, they might use different amounts. You can't just copy and paste. Does that make sense? You have to have understood what's going on, and then you can apply this and you'll get your marks. Does that make sense? So I'm here to explain the logic. All right? All right, let's rock and roll. Cool. So, there they gave us the VAT inclusive. That 23,000 is VAT inclusive. So we need to remove the VAT. That question that we did, question, I think it's 3.8 or 3.9. This is what is happening over here. If you understand that question here, you have a good time. Okay? So here, we're removing the VAT. We say what we want divided by what we have. We have the VAT inclusive. What we want, remember this, divided by what we have times what we have, rand amount. Okay, right. So there we said what we want is the VAT exclusive, which is 100. What we have though is the VAT inclusive, which is 115, right? And then times what we have, rand amount, which is the 23,000. I'm just explaining the logic, and that's how we then get the 20,000. So the cost of sales on product A is 20,000. Now we go to product M. Did they tell us in the question what we purchased product M for? They didn't. So how do we find out our cost of sales? We have to use how much we sold it for. And then we also have to use our markup and work backwards. Okay? Remember what I told you guys? Understand, master, apply. Can you now see how you are applying? Does it make sense? Okay, right. So, again, we go back to our model. We've got the selling price. Can you see that? The selling price is 22,000. It's there, right? They gave us the 22,000. They said that's what we sold it for. And they said that's what we sold it for, including or excluding VAT. Excluding VAT. So this is great. It's one less step. Because if it was including VAT, we'd have to remove the VAT and then work back to our cost. Does that make sense? Okay. So let me say, okay, what we want is cost, which is 75%. So then we say, okay, same principle. What we want divided by what we have times what we have, rand amount. Okay, the only difference now is what we have. Oh, and this is now where this can, because I need my different colors. Okay, so we're saying this is what we want. So we're then saying, let me just erase this here. So we're then saying 75, what we want. What we have though is, let me double check that, 100, yes. Okay, times now the 22. Okay, and there you should then get your 16,000. Okay, now you've got your two amounts, the two costs of sales for the two products. You add those two together, you get your 36,000, which is now your final answer. 36,500. Any questions there? Everybody happy? Okay, so that was question 2.1. We move on over to 2.2. What are they asking in 2.2?
No, I think we will definitely use the total sales revenue earned by food traders during April 2021.
Okay, the total sales revenue. I think we will definitely use it in this case. But it's fine. Right, so now we need the total sales revenue. We already have the total sales for product M, all right, which is the 22,000. They gave us this. And remember, your sales revenue, when we're talking sales revenue, we're talking about the money that we are receiving as a business. Does that make sense? We're not concerned with the output VAT, because output VAT is not ours. It's owed to SARS. Does that make sense? So, 22,000 sharp, we're happy with that. But they didn't give us the sales revenue for product A, is it? So we now need to work that out. So we then have to work that out based again on our markup. And that's what we're doing over here. So we're saying, okay, we know that the markup for both products is 25%, right? So in other words, we want the selling price. And you saw the model, selling price was 100%. What we have, however, is the cost, which is 75. So 100 divided by 75, we get our 26,000. Remember they said round up to the nearest rand. So now you're here, this should be 7. That's where we end. So you add 26,667 plus the 22, and boom, you got your answer. Okay? Everybody have a paper, past paper. Go. Why are you so far? Why? Okay, so I want to get moving because I think there's more complex things that I want us to spend time on. Right, 2.3, what are they asking in the paper? It's too easy. It's too easy, guys. Sales revenue minus your cost of sales gives you your gross profit. Everybody know the formula for gross profit? Everybody, I can move on? Gross profit rand amount. Must be able to distinguish. I can see you're thinking about it. Just processing the CPU was processing. Okay, no, it's fine. So then we move over to 2.4. What are they asking in 2.4? The VAT input or input VAT claimable by blue traders. Okay, cool. So now we need to calculate what? The VAT portion. So this is what I'm saying. They can ask this thing 1,000 different ways, but if you understand, you want to drive. How many marks is this? Yeah. 25. 25. These are your marks. Looking at those and saying, these are mine. All right. So 15 over 100, because we know this is VAT exclusive. So you need to know which amounts am I working with. That's the only way you can apply what do I want divided by what do I have. Boom, you get your 3,000. Cool. Product M. This was our cost, excluding that. So again, 15 divided by 100. Boom. You add those two together, that's your total input VAT, because we only had two products. All right. 2.5, I'm sure it's now the output VAT. So again, you can calculate the output VAT on each of the products based on the sales revenue, excluding VAT on each of the products, or you can just go straight to the total sales that we had, excluding that. And let's say 15 divided by 100. Okay? Even if they give you the sales including VAT, you should know that how to get your that amount. And this is why I keep saying, just remember, what figures am I working with? Okay, because you see people doing the right things, but then they forget. I don't know if it's exam pressure, I don't know if it's they didn't practice enough, but those are the small things that rob you of maybe getting a 70%, maybe even getting a distinction. Okay, so have a good night's rest on Sunday. I know it's a long weekend, but yeah, please. Then here, 2.6 there, I believe they were asking us to now calculate. Is it a VAT refundable or a VAT payable? So in other words, we need to deduct, we need to subtract our output VAT from our input VAT and find out which one is more. Okay, so fortunately, unfortunately actually, our output VAT is actually greater than our input VAT, which means that we must pay SARS this. Does that make sense? Everybody, what you've just done here is the VAT return. This is what we do on a VAT return. Okay, let's move on. 2.7. 2.7, I didn't fill this in because I now want to ask you guys. I want you to tell me. Yeah? Isn't we are revising, eh? You guys have started. You're even ready to write today, isn't it? This guy's move. Is he fine? So, what are they asking there?
What does yeah, so basically classify input and
Classified input and output VAT, whether it's an asset, whether it's a liability, whether it's owner's equity.
that's a hard one, eh?
It's a hard one.
That's a hard one. I found that. I don't know.
Help us, guys. It's a hard one. What is this? You guys can see, ne? What is it? What is output VAT? Let's start with output VAT. What is output VAT? It's a liability. What type of liability? We remember we have two types of liability. It's a current liability. So here they just asked you to categorize it. Right? So if you just put liability, it will be fine. But you need to know that it's a current liability. In other words, we are paying this thing off within 12 months. We have to pay SARS what we owe them within 12 months. Does that make sense? Okay. Right. Why is that important? Because then you will know whether to debit or credit, whether to you get what I'm saying. Well, actually, you would know, but it's important because you now need to know the period in which we are paying this. And also, if they make you do a balance sheet newspaper, you will need to know where you put input value or output value. So if we know that output value is a current liability, then what is input value? Current assets. I said this the last time. If you can remember one, to say, oh, that's a current asset, input value is a current asset, just remember the other is the opposite. Does that make sense?
So,
Okay. Yes?
sir, can you just go back to 2.5?
2.5. Guys, if you have questions at any point, please ask, because the revision is for that.
2.3.
Okay? The revision is for that. That's why I am not even like, oh, sorry. Is it fine? Because I want you guys, it's time for us to clear up any confusion. So I really hope you've been studying. Okay, does that make sense? Because if you haven't been, and you're only starting now, that means that you might have questions over the weekend. And guess what? Me, I'm also living my best life. It's not accessible. Does that make sense? So, all right. If you really do have questions, you're struggling with something, please, please, please call a friend. Call a friend. Okay? Call a friend. Okay, so now we move to question 3. Question 3. Question 3. Now I'm going to show you the hard bit here. What is actually going to drain you the most, or what should drain you the most in this question? Because guess what, guys? On Monday, there's going to be journals. If there's no journals, come to me and ask me for 50 rand. If there's no journals. Yeah.
So the thing that will be salary if they mess you up.
And that time it's mid-month. Money has already been spent. Okay. But I'm telling you, there's going to be journals. There's no, remember what I told you, my class knows this. If you can do unit 4 and 5 and do it well, you pass this one. Yeah, look at how many marks. 50 out of 180. So if you've hammered question 2, you've hammered this question, you're already sitting at 75. We're now fighting for another, what, 5, 15 in order just to pass. Does that make sense? Guys, this model is very doable. But remember what I told you in the beginning, strategy. Okay, cool, let's jump into it. So here it says, use the relevant transactions given above to complete question 3.1 to 3.4 for green traders for the month of May. Oh, so already it's registered. We're focused on May. Make sense? 3.1, cash payments. Total the creditors column, creditors control, and inventory columns only in the cash payments. All right, cash book payments. Okay, I need the other page. Then the next 3.2, it says creditors journal. The creditors journal does not have to be total. Oh, guys, I'm going to tell you something just now in relation to that. Then the next one, creditors allowance journal. The creditors allowance journal does not need to be total. Then lastly, general journal. Narrations are required. Guys, if you see, they say, you do not need to total. Guys, it's beautiful when you total it because it shows me you know how to act. But, tell me something. If they tell you not to total, how many marks can I give you for total? How many? I can't give you anything, right? So what is the value add of totaling when you don't need to total? Now 0. And guess what? You would have wasted your time. Where you might have used it on something else. So please, I know you guys know how to add, otherwise you wouldn't be here. Please, don't waste your time with that. Okay, that's what I wanted to tell you. Let's now jump into the hardest bit of this. So we read up top there. Guys, in the interest of time, I'm not going to read through this. I'm just going to tell you what's there. I've obviously gone through it. I want us to get through everything and try and answer any questions you may have. So that said, if at any point you have questions, ask me. I'd rather we don't finish both papers, but I've answered as many questions as possible. Is that fine? So here they're obviously telling you that you're a registered VAT vendor, you only trade with other registered VAT vendors. They're telling you VAT is included unless told otherwise. They're telling you that VAT is at 15%. Then they also give you the codes for the respective documents. So here they also tell you you're operating on the perpetual inventory system. So here they say OIN is your original invoice. OCN is your original credit. Original credit notes, yes. CC is your check counterfoil. And JB is your journal voucher. Okay? Very important. Guys, this is the hardest bit. To identify which transaction goes into which journal. This is where we lose you or you excel. Okay. So, you know what, guys? I didn't even read these transactions, and I'll tell you why I didn't read the transactions. Because I was using the source documents to quickly identify. Does it make sense? And this is why I gave you that other ice task to say what source document we go into which journal. Okay, so here, the first one, we have OIN, which is original invoice. Original invoice. Remember, if I'm receiving an original, it's because I'm the customer. And if something is an invoice, that means it was paid, this transaction was done on credit. So which journal are we entering for original invoices? The creditors journal. So you saw I've written here, I put CJ next to that first transaction. Go to the next one. I look at the source document. OCN. That means that original credit note. It means that we, as the company, is returning something or requesting a rebate. If you read the transaction, it says trading inventory return to the supplier. Can you see, if you know your source documents and they give you source documents, you're going to save time instead of reading every single transaction. So, there, creditors allowance journal for the fifth. We go to the next one. CC, check counterfoil. It means that we wrote a check. It means that we have paid for something. So there you write CPJ. Next one. On the 9th, check counterfoil, CPJ again. Next one, OIN, original invoice. Again, creditors journal. Next one, CR for receipt. Then CR, did they give us that code? They didn't give us that code. Okay, so let's read the description. It says, Non-Tokozo Kumalo contributed cash to the business. Who is Non-Tokozo? Is the owner. So this was a capital contribution. And we know whenever we receive cash, which journal is affected? The CRJ. Okay, did they ask us to do the CRJ? No. So that's an irrelevant transaction. But somebody on Monday is going to enter into one of these ones that they asked for. Because they don't know their story. They went doing homework when they were saying, please keep exercise. Okay, but it's fine. Next one, CC, so that's CPJ. Next one, CC, CPJ. Next one, OCN, CAJ. Next one, CC, CPJ. 20th, CC, CPJ. 20th, Journal voucher. So that's JV, or General Journal, GJ. Then next one, CC, CPJ. Last one, CC, CPJ. All right, that's the hardest bit. That's the hardest bit. You get that right, guys, you're going to score well on this journal questions. Okay. And they will always throw in one that is not for the journals that you're doing. So where we saw cash receipts, they just said, do you really know your story? Or you're just a chance? Okay, right. So then we now get into it. Now, obviously, we start with the cash receipts. So you do it based on the columns that they've given you. They will give you the columns. They will give you the columns. So fortunately, with cash payments, we obviously don't have cost of sales that we need to calculate. Okay, guys, remember this is suggested answer. Suggested answer. So if there's any mistakes, please. Yeah, and you see, out of habit, I just totaled, but all they said we need to total is these two. Okay. So what happened on the 8th? You guys talk to me. I'm talking too much here. Talk to me. Under the description, what happened on the 8th? We drew a cash check for petty cash. Okay. So that obviously is going to affect our bank. Okay. Right. Money is going out. We should have written petty cash in details. Understand? Sorry, guys. Okay, take note of that. So, Sandri, you're going to put the amount 1,200. There's no VAT on this, just in case. And the details petty cash. Okay, right. What else happened? What next? Yes. Remember, we just withdrew our own money. It's not like we purchased a standard rated product. Does that make sense? Okay. All right. Let me also have a look at that. Yeah. Okay, fine. Yes.
Is there a reason you totaled your salary?
Another mistake. Sorry. I noticed this as I was doing it, and I said I would remove it, but I didn't. Yeah. No. Let me actually remove that. Here's my. Yeah, because that's not going to get posted to anyway, so there's no reason to have that. And let me, whilst we're at it, petty cash. 1,200. Okay, everybody happy? Okay, so let's move on to the next one. Remember, we wrote these things out, so we know immediately, since I'm doing CPJ, wherever I wrote CPJ, I'm going there. So the next one was on the 9th. And there they said, payment made to star dealers. No settlement discount was received because the account was not paid in full. Okay, so the whole 13,000. Okay, so that's obviously coming out of our bank because money is leaving us, right? It's for a creditor. Okay, nothing else that we need to do. Okay. Remember, input VAT would have been calculated in the creditor's journal when we made the initial purchase. So you're not doing that over here. Here we're just recording the payment. Does that make sense? Okay. I want you guys to go in there with confidence. Does that make sense? Okay. Fine. Let's go. Then the next one, the next CPJ was on the 13th. And their inventory for 13,000 less 10% trade discount. Ooh. For 13,000 less 10%. Okay. Excluding that. Can you see my amount is 13,455. Why? Why? Sorry, say again? Yes. We're always buying inclusive of that. Does that make sense? Because if I'm the person selling to you guys are the business, and I sell to you excluding that, guess who? I'm a VAT vendor, right? Guess who's going to pay the VAT? I'm going to pay the VAT on your behalf. Do you think I want to pay the VAT on your behalf? No ways. So even though we have the amount excluding that, we need to report it inclusive of that. So calculate quickly the amount inclusive of that. So in other words, we're saying that we want 115 because what we have is the VAT exclusive, divided by what we have, which is the VAT exclusive, which is 100, right? 115 over 100 times the 13 gives you what? 4950. Why is that different from what we have here?
That's 100%, but you only bought it 90%.
Because in the question it says less 10% trade discount. So it didn't say that 13 is after the 10%. It says less than 10%. So now we need to say 10% of the 40,009 what? Minus that, or you can just say 90 over 100. It should then take you to, and are you getting it? So this is where even if you've had accounting and you're like, I'm not going to study the whole semester, these are the small things that don't give you the distinction you should have gotten. Does that make sense? So there we go. We've got that amount, we plug it in, but then we know trading inventory, it's the cost price. In other words, the amount excluding that. So then we say 100 over 115 times this amount to get to that. Then we obviously put our input back because we know we're gonna claim it back. Boom, done with that transaction. Okay. So let's go on to next one, which was the 14th. What was happening on the 14th? They say cash purchases of stationery, 805, including that. It made our lives a little bit easier. So that's the total going in. The bank is always including that. Bank is always including that. Creditors control including that. Trading inventory always excluding that. Okay? So, stationery, boom, 805. Okay? We don't have a stationery column, we come to sundry. Put in our details, stationery. Okay? Fine. We know that stationery is standard rate, we can claim that. So we calculate our input VAT, boom, we got to 700. Okay. Next one, on the 18. Penny Furnitures. Purchase a couch furniture for the recipient area. Pay cash. Yes.
Sir, can you please explain the 13? Why is it 13,100?
It goes back to, again, remember that 13,000? It was excluding that. All right? We know that our supplier is going to charge us including that. So we need to work out what is that inclusive amount. To get that, we're then saying 13,000 times. Remember this VAT exclusive. So we're saying 115 over 100, which is then giving us, I know you calculated this, Ashton, 14,000 how much? 950. Okay, so this is actually the full cost of what we bought. But now we know that we received a 10% discount, right? So if we received a 10% discount, that's the full price. How much did we actually buy these goods for? Then we say times 90 over 100. Making sense? And what does that give you? All right. No, we're actually calculating the full amount. Because remember, we're still at bank. We're still at bank, isn't it? And we want to find out how much are we actually paying for this good. Does it make sense? So it's always about, okay, what amount am I actually looking for? We want to know how much we're paying. So that's why we're now calculating, okay, what is the total? Because it said 30,000 less. So it means we haven't yet actually paid, we actually haven't yet calculated the discounted amount. Does that make sense? So, am I answering you? Please, you still look confused. Talk to me. Yes, this is the price that the goods, this is the actual price of the goods, the total price of the goods. Does that make sense? Before we actually get the 10% discount. Now you with me. So we now have to, because from our side, we're paying the amount less than 10% discount. So we now need to calculate what is that amount, which is why we're now saying 90%. We are paying 90%. You want to say something?
The 14,940, that's inclusive of gas. That's input gas.
Yes.
She said output.
Is that where your question is? It is input. Okay, so when do we have input VAT? When do we have output VAT?
Input VAT.
And I'm asking the class, when do we have input VAT? When do we have output VAT? When we purchase what type of VAT do we have?
Input.
When we purchase goods, we have input. You guys agree with that?
No.
You don't agree with that? Help me, guys. I also don't know. I also don't know. When we pay sales, yes. Why would we be paying sales? What would make us owe sales money? Because when is money coming into the business? When we purchase or when we sell? When we sell. So here, what are we doing? We're purchasing, which is what she said. Whenever we are buying something, isn't it? That's when we're purchasing, isn't it? Is it making sense? Another way that I explained it earlier in the semester, I said input VAT is when we have input. If I am somebody who sells books, I'm tutor. My books are my inputs. Does it make sense? So whenever I'm purchasing books, let's just call it from macro, whoever my wholesaler is, I'm going to incur input VAT on all the books that I purchased. Does that make sense? Can you see now the connection? Inputs, I'm purchasing stuff. If I'm running a factory, right? What type of factory? Let's say I build PlayStations. That's my argument's sake. Let's say I build a PlayStation. So you know in a PlayStation, you've obviously got the outer bit, you've got the CPU, you've got all the plugs, whatever. Whenever I'm buying those materials that I need to create a PlayStation, those are my inputs. Does it make sense? Right? So I'm going to incur input VAT on those inputs. Does it make sense? But now what happens when I sell my PlayStations? When I sell, my PlayStation is now an output. What I produced in the business. Does that make sense? And on my output, the goods that I am selling, I incur output VAT. Are you now seeing the connection? Is it making more sense? Okay. What you ask is very important. Because if you guys are not sure about that, along the way, it's not just going to harm you in the journals, it's going to harm you in the general journal. Okay, it's going to harm you when you do general ledger accounts, when you have to do the T accounts. You won't know whether you should be doing output VAT or input VAT. What time is it? 53. Should we take a break?
No.
You sure? Okay, let's take a break at 10. Because I know we started at about 10 past. Is that fine? Okay. I don't want our brains to get fried. So much more to go. But when you finish journals, you see the rest of the papers a lot faster. Okay. Right, so let's go. Okay, so is everybody happy with 13? Thank you for pulling me back as well. I forgot you asked a question. Yes, thank you for your question as well. Okay, that's what we are here for today. Okay, so I think we went to furniture. Yes, the couch. And we paid for that by cash. Okay, and there it says 13,800 including that. Okay, so we know that that's the full amount that's going off our bank. And we know that furniture is standard rated, so we can claim input that. Okay, and then obviously we furniture we are going to put the amount exclusive of that. Everybody happy with that? Next one on the 20th, it said settlement of account with with Moon CC, less 5% settlement discount. Okay, I hope you're realizing there's a difference between settlement discount and trade discount. Trade discount, you receive it straight up, upfront. At the till, when I go and buy my lovely clothes from Edgar's, they say 30% off. That means that when I get to the till, they're going to give me 30% off. Does that make sense? From the beginning, the transaction was dealt with a discount. Settlement discount you receive when you say, hey, Ashton, I'm going to settle early. So can you give me a lower price to settle at? That's a settlement discount. Yes, there's a difference. So then remember this trade discount, I'm receiving it upfront. So immediately I discount the 10%. And I'm up before I actually buy, yes, before we actually buy. The settlement discount is always, I'm always also buying on credit. So when I first come into the store, you tell me, the good is worth 5,000, I must pay 5,000, right? And then you say, let's say we agree terms for 6 months. I must pay you in 6 months. Now, I say, no, I'm coming to pay you in 2. You then say, oh, if you pay me in 2 months, I'll give you a 10% discount. And you now see, they're calling it a settlement discount because I'm settling earlier. Make sense? Trade discount, we're saying we are actually giving an open discount of 10%. Or they might just say, no, we like this human being, he always does business with us, we'll give you a 10% trade discount or 5%. Makes sense? And trade discounts, usually you are actually transacting cash. Usually. Yeah, yes. Because it's in the store when you walk in the store. Yeah. No, it's actually the other way around. With a settlement discount, remember, with a settlement discount, the transaction was done prior on credit. Does that make sense? Because for me to settle, it means that I had already owed you. Does that make sense? I already bought goods from you, and now I'm coming to pay you. That's me settling. So now we're just saying, because you come early, you can pay less than what you would have paid 6 months. That's why we call it settlement discount. It's actually something we do to encourage people to pay earlier than with Greek terms. So the transaction will have been done on credit whenever there's a settlement discount. And this is why we now have to report it in the general journal as well. Because when I bought from you on credit, I bought at 5,000. I reported in my book, I owe this supplier 5,000. But now you've given me a settlement discount for 500 rand. So in my books, I need to rectify the cost of this item to me. Does that make sense? It's no longer 5,000, it's actually 4,500. Does that make sense? So I need to then report that, and I do that via the general journal. Makes sense? How do we calculate it? So we'll actually see that when we go to the general journal. But right now we're in the cash payments journal, so we're reporting the actual settlement. We're reporting the 4,500 that I paid. Does it make sense? Because whenever you have a settlement discount, it's affecting two journals. A settlement discount. Whether it's a settlement discount received or a settlement discount granted. If it's received, which is in this case, where the company is receiving the discount. That means that we have to record the settlement, how much I actually paid, that 4,500. I must record having paid it. Then I must also go and record the discount, which happens in the general journal. Does that make sense? So payments, we know, happen where? Cash payments journal. Does it make any sense? And now, if we're talking about settlement discount granted, this means I'm giving a settlement discount, right? The customer is going to pay us. Whenever we receive cash, it goes to the cash receipts journal. But we also are going to need to report the fact that we gave a discount, which gets recorded where? In the general journal. So can you see, two journals are affected when we have settlement discounts, whether it's received or granted. You wanted to ask another question? Yes.
The 6,000. Is that what we report?
Nope.
We don't.
That was at the beginning of the month. Did we have transactions with Moon CC during the month? Remember, we're recording for the whole of what? May. So we're not just concerned with how much they owed us at the beginning. We want to know right up until the end. So what do we need to do? We need to calculate how much do they owe us at the end of the month or up until the 20th of May. So we then go through the transactions. If we see on the 11th, they bought from us. For how much? 18,400 including that. So we take that 6,000 that they owed us at the beginning, we add it to the 18,400, what do we get? So I'm going to write this out. I need you guys to calculate therefore. Where did I leave it? So we're saying at the beginning, 6,000 plus 18,400. But this is excluding that. So we need an amount 8. So calculate for me quickly. 18,400 times 115 over 100, what do you get? Because that's excluding net. Yes. What do you get? 160. Okay. Right? Then, let's see, do we have any other transactions with them? Flip the page on the 16th. And what's happening? Now they're returning goods. So that's going to decrease. 2,530. Right? And then nothing else. Okay. So that's going to now give us how much they owe, or sorry, how much we owe them. Because remember, this is our creditor. What's the total that you get there? What do we get?
24,000.
And 30. 30, okay. 30. So now that's the amount we're going to use. But remember, they told us that we received a discount, right? Of how much? Of 5%. So, in other words, this is 100%, ne? But what we want is how much we paid. And we paid how much? 95%, because they gave us a 5% discount. So what we want is 95%. Remember our formula, what we want divided by what we have. But what we have is 100%. This, as we said just now, okay, I'm going to erase that percentage. This, we said, is 100%. But what we want is the 95. Okay, just making it a little neater. And then what do we get? Which is what we put here. Because that's how much we paid them. We paid them 95%. Is Is it making sense? Guys, we need to practice between now and Monday. We need to make sure we get this right. I was listening to some video on YouTube yesterday, and they said something very interesting.
So we can interrupt for a second.
Oh,
Sorry, man. It's 3-2, huh?
yeah. So they say average people practice until they get it right. Exceptional people practice until they can't get it wrong. I really think we should stop here because I think I'll fry your brains before we get far. Yeah, I'll get to say what you're trying to say and I'll answer you and then we'll call it one.
The credit control is inclusive of VAT. The trading inventory inclusive of VAT.
So again, bank
Yeah.
inclusive of that, creditors control inclusive of that, debtors control inclusive of that, trading inventory exclusive of that. This is obviously your VAT amount, so that's always going to be your 15%. And then sundry depends on the item. So if it's something where we can't claim VAT, then obviously it will be inclusive of that. If it's something that is not applicable to that, again it will be the actual amount. However, if it's something like furniture, it will be the VAT exclusive amount. Okay, so you need to know what is this thing standard rated? Is it zero rated? Is it not allowable? Sorry, you wanted to ask something before we take a break? Guys,
You wanted to know if trading
yes, they said to the nearest rand. If I'm not mistaken, check. Am I right? Did they say to the nearest rand? I believe so.
You said it in the previous question.
Wait. What did they say in the question? In terms of, did they say to the nearest rand? At the end or under the required?
Wasn't stated.
Wasn't stated. Okay, so let's look at the.
None of this question.
Okay, no, that's fine. So now let's look at the beginning. At the top. At the top of the question. I'm talking about over here. Does it say anything?
No.
Doesn't say anything. Yeah. Okay, so you could put it to the decimal place if you want to. I'll just round it up to the nearest right on my side. I think that's neat. Okay, guys, let's just take a break. Let's be back by 10:14, 10:15. Let's take it 10:15. We clearly have work to do, but we will do it. Okay. Now you know why I don't go through the theory questions, because there's never enough time to do the stuff that really requires our attention. Okay. All right. So let's take a breather, and then we'll proceed for the past.